Tesla just hit a new closing high for 2025, and if you're an investor, you need to understand what's really driving this surge and what it means for your portfolio. The electric vehicle giant closed at $434.21 yesterday, marking its ninth gain in the last 10 trading sessions and capping off a remarkable 30% climb over the past month. But here's where it gets interesting. This isn't just about car sales anymore. Piper Sandler analyst Alexander Potter just raised his price target to $500 after visiting China, and what he discovered should change how you think about Tesla's competitive position. While Chinese automakers like Xiaomi and Li Auto have arguably surpassed Tesla in manufacturing efficiency, Potter found something crucial. These companies still look to Tesla for guidance on artificial intelligence and self-driving technology. One Chinese executive told Potter that without Tesla going from 0 to 1, they cannot go from 1 to 100. That's a powerful statement about Tesla's moat in the AI space, and it's exactly why this stock continues to defy skeptics. Recent catalysts are stacking up beautifully. Elon Musk's $1 billion share purchase last week sent a clear signal about management's confidence. The new compensation proposal and robotaxi expansion plans beyond Austin are creating genuine excitement about future revenue streams. Potter's bullish commentary on the latest full self-driving software version suggests Tesla's technology lead might be widening, not narrowing. However, let's pump the brakes on pure optimism for a moment. That Reuters report reveals a troubling gap between Tesla's promises and reality, particularly in California. While Musk claimed they'd soon launch robotaxi service in the San Francisco Bay Area, with regulatory approval coming quickly, the truth is Tesla hasn't even applied for the necessary permits. This process typically takes years of testing under state oversight. What does this mean for investors? Tesla remains a tale of two companies. The traditional automotive business faces intense competition and margin pressure, but the AI and autonomous driving potential represents a massive upside opportunity that competitors are struggling to match. The 30% monthly gain reflects growing confidence that Tesla can successfully transition from being primarily an automaker to becoming an AI-powered mobility platform. Potter's $500 price target implies another 15% upside from current levels. But remember that Tesla's volatility cuts both ways. For existing shareholders, this run-up validates the long-term thesis while creating a decision point about taking profits. New investors should consider dollar-cost averaging rather than jumping in all at once, given Tesla's notorious price swings. The regulatory challenges around robotaxis remind us that execution remains crucial. Tesla's technology advantages mean little if they cannot navigate the complex approval processes required for a widespread autonomous vehicle deployment. My take? Tesla's AI leadership gives it a sustainable competitive advantage that justifies premium valuation, but the timeline for monetizing this advantage remains uncertain. The current rally reflects genuine progress, but don't let FOMO drive your investment decisions. If you found this analysis helpful and want more investing insights that cut through the noise, hit that subscribe button and ring the notification bell. We break down the stories that matter most to your portfolio every single day.